the market is always right, as I said. So of course, you need to be adaptable, to be adaptive to the market, because you need to feel the market. And this is why we had, for many years, we tried to build a robot or algorithm based on indicators of technical part, of also on fundamental news. But it's very difficult because it's like a child. The market has its own way to live his life. And you need to adapt yourself to the life of the market. You can't be so sure of you, and when the market starts to make you feel that you are in the opposite side, you need, of course, to adapt to it.
One belief or one story that I've learned that is widely common, that can be very destructive to one's portfolio, is this belief, right? So a lot of us, when we start out, whenever an investment turns into a loss, a lot of us, maybe we're guilty of this, maybe you know someone who's been guilty of this. We tell ourselves the story, it's only a loss if I realize it, right? Which means that you tell yourself a story, or you have this belief of distinguishing between paper losses and realized losses, which means that if something turns into a loss, you say, oh, that's okay, it's just paper loss. It's only going to become a loss if I actually realize it. And before you know it, that kind of belief, that kind of story, that kind of conviction, whether we know it or not, is actually what turns a small loss into a big loss, right? Conclusion is, it actually results in the emotions of neglect. It results perhaps in some overconfidence, right? And the action or the habit is really not being able to cut losses, right? So that is one example, a very simple and common widespread example of how an unexamined story can actually do damage to your own or to our own portfolio.
At its core, a trading system contains a couple of things. It contains the setup, which is the conditions under which it will consider taking a trade. It contains the entry trigger, which is the precise moment that you want to buy each instrument. So it's like, you know, the crossover or the indicator signal or the breakout that causes you to buy or sell if you're going short. It contains the exit rule, which is exactly when you're going to sell. And it often contains, not always, but often contains an initial stop loss. There may also be a pyramiding rule so that you can add to your position as it goes in your favor. And then wrapping around all of that, there's the portfolio, the risk management rules, and the position sizing rules. So the trading system is a set of rules which are completely objective, which define exactly when you get in and get out of the market. So there's no debating it. It's not, you know, is this, you know, has it touched the trend line and bounced off, or did it hit support yet, or should I wait a little longer? It's not, is this a divergence? Should I buy? It's 100% objective. There is no debating it. And the way you know that your rules are 100% objective is that you can actually write them in a way that a computer can understand. If this, then that. If this and this and this, buy. If this or this, sell. That's the beauty of a trading system. And when you can do that, when you have your rules 100% objective like that, you can test them, and you can test them over a lot of data to really build that confidence.
A cycle is an event such as a price high or low which repeats itself on a regular basis. Like our birthday comes once in a while, and every year. There are certain important things in our life. Just forget about markets. Just let's concentrate on our life. There are certain also will have different things which keeps happening on a regular basis. Cycle exists in the economy, in nature, and in financial markets. So cycle exists in human life. It exists in the economy. Like if you are seeing throughout the world, you know, there are a lot of talks going on the recession, you know, and few, like last 2 years, there were very good moves in the economy. So, you know, we'll have boom and bust cycles, and it keeps repeating again and again. And we have to make sure that we are able to, if we are able to capture at the right time, we can make a good, we can make good money in the markets. Cycle are also part of technical analysis of the financial market. Cycle theory asserts that cyclical forces, both long and short, drive price movements in the financial market. Now, many people, you would have seen there are a lot of indicators like RSI, MACD, ADX. Any new person who comes to the markets, he will get first understanding of these indicators. Now, these indicators work on price, So now the time cycles are something which works on the time part. We don't care about what indicator is saying or what price is saying.
If I like somebody's portfolio, I want to copy them. So here we can check out this trader over here. He's not been on the platform for incredibly long, but his username is iEarnings, and we can see exactly his performance since he started. We can see his risk over time. Right now he's very low risk, which is just 2. The risk is always scored from 1 to 10, so 10 is very, very high risk, which is kind of unmanageable risk. 7 is even kind of a high risk. And 2 is extremely low risk. So when you copy this trader, you know that you're not going to be risking a lot of funds. And right now he has 788 different people copying him. So if I want to copy him as well, all I need to do, click the blue button and choose the amount of money that I want to allocate to him. Right now, let's say I'll allocate just $500. And I click the copy button. And now this trader is added right into my portfolio with the $500 that I've allocated. That will automatically mirror his portfolio. And he's trading right now on Adobe systems, just for example, as a stock. But there are many different traders that you can find inside of this feature called Copy Trader. And you can talk to them directly. If you have any questions about their trading strategy or anything like that, you just go over and check them out and say, hey, what's up?
The next stage that people go through is sampling, which I think a lot of retail traders don't embrace fully. So lots of independent retail traders want to go to one coach, one educator, one place, learn a few setups, absorb them, apply them, and go ahead and become rich. And if that doesn't occur, they make one of 2 conclusions. One, either the person that they learned from is a fraud, or they themselves aren't good enough to be traders. And what we see at our desk is different from that, which is that people are exposed and trying and sampling lots of different types of setups. So even though we are mostly active short-term traders, there's lots of different types of ways to attack markets as short-term active traders. And they sample with setups that traders on the desk have traded with Edge and get experience with them, and then for themselves figure out which ones they think are best for them.